Welcome to Echo Trade. It's Jeff Roth. So everybody has questions about the war in Ukraine and now in Israel. And so a lot of investors, it's causing me pause. And one of, if not the biggest sector that's affected by these events is going to be energy. And so we brought on Thurman from Brookmont Capital. Brookmont is overweight in their portfolio on energy. So they're the perfect guys to bring on to talk about this. They've been looking at this for the last year and a half, and then specifically now with the war in Israel. So Thurman, appreciate you being here. How's it going, man?
It's going well out of a hotel room today, but that's always fine.
Yeah, you're always traveling. You are a traveling man, that's for sure. I don't envy it at all. But anyway, so talk to us. I mean, like I said, people got a lot of questions. What have you guys seen? First, for the last year and a half with the war in Ukraine and the build up to that, and then now that the war in Israel is taking effect, like how's that affecting the energy markets as you guys can see it?
Yeah, so we've been a little bit overweight energy in our portfolio relative to our benchmark for quite some time right now. There's three names that we really like in the portfolio that are all energy companies, but we've been overweight them for quite some time just because we've thought that there was underinvestment in the energy space in terms of the infrastructure and production as well. The war in Ukraine, or special military operation, whatever you want to call it. Yeah, it did present a new opportunity or a new market per se, because the build up to that war, obviously Russia was moving troops onto the border, and a lot of people were noticing it, including the U.S. But most importantly, the traders and investors were noticing it. So during that time, before the military operation actually fully began or the invasion began, crude oil prices started being traded with a geopolitical risk premium to them. Mm-hmm. And we can conclude this because we looked at the demand and supply numbers at that time. It's better to look backwards with those numbers to really find what's affecting it. So we found that there was a premium being placed onto crude oil prices because of that military operation, obviously. But then if you look at it, the supply that Russia was bringing to the market the sanctions didn't really negatively affect the global supply of oil as much as what the prices would suggest. So we determined that there was a risk premium to that being applied. And as that war kind of moved on and investors and the global community kind of became comfortable with the fact that conflict is probably going to stay in Ukraine for the most part. And then also there were peace negotiations between Saudi Arabia and Israel trying to really kind of make the Middle East a more peaceful place. We saw that risk premium go away, and actually there was probably more of a geopolitical discount going on in terms of the crude oil prices as well. So
those negotiations between Israel and Saudi Arabia, just in the last couple of weeks right before, Hamas went in on October 7th.
Yeah, it was kind of like at the beginning of the year. We saw them trying to make headway, and then leading up to the war in Israel, we saw this geopolitical risk premium start to come back. So right now we can see from what our data shows us is that it wasn't necessarily the supply and demand affecting it. It's kind of the global crude oil market prices right now are really determined by this geopolitical risk situation. And as the war in Israel, the headline risk in the global market or the global oil market right now is very strong. So as the war either gets better or worse, we're going to see oil fluctuate a lot more than what the actual supply and demand merits.
Yeah, gotcha. So on the build up to the war in Ukraine, and then kind of during that, it was oil and energy were kind of at a premium. And then for a little while prior to the war in Israel, it was actually at a discount, is what you're saying. But now we're kind of back at a premium state. So it's really fluctuating based off of these broad political events.
So, in the third quarter, energy has been the leading sector. I think it's up 6% in the third quarter. Now we're in the fourth quarter, and it's gone up even more. So that's what we're seeing right now is that there's so much geopolitical risk in the world within that oil, the crude oil market right now. And it's really affected by headlines, which is not necessarily what investors like because you can never predict a headline.
Exactly. I was going to say, with that, it sounds like you're really going to have to be kind of navigating with the headlines and with the market. But do you guys have any outlook for the at least the rest of the year?
Everyone's trying hard for that to try to resolve that issue. We don't see it as an overnight issue. We think it might be more ongoing, like the Ukraine situation, but hopefully they can contain it into that one specific area. And if they're able to make progress on that, then that premium might go down a little bit, but we still think oil supply is pretty constrained. So we do see, price per barrel staying on an elevated price to where it was at the beginning of this year.
Got it. Well, you hear it here. Thurman from Brookmont Capital, they're overweight on energy. They're looking at this highly a lot more than I am. So appreciate you giving the insight and the expertise, Thurman.
Yeah, thanks, Jeff.
And investors, if you like what you heard here, click subscribe. We're going to continue these on an ongoing basis every week with experts like Thurman and the team at Brookmont Capital.